Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. Today we're going to take a look at an article from Benzinga about cannabis entrepreneurs suing Captor Capital for fraud and breach of contract. To help us do that is Katrina Glogowski, angel investor and attorney in Seattle. Katrina, thanks for being back on the podcast.
Thanks, Josh.
All right, so apparently there's a California entrepreneur suing a cannabis company, Captor Capital, alleging fraud and breach of contract. So the founder of this California cannabis extraction company, Mellow Extracts, they filed the suit in Los Angeles, claiming that almost $3 million in damage with the dispute involving two Captor-owned California dispensaries working under the MedMen brand. So Captor Capital, it's based in Toronto, operates most of its businesses in California, and its subsidiaries include manufacturing, distribution, and retail cannabis. So the bait and switch fraud accusation is when the founder of Mellow Extracts was also the license holder for two MedMen dispensaries located in Santa Ana and West Hollywood. That same year, he was employed by I5 Cannabis Holdings to become the CEO of I5 subsidiaries, which was later purchased by Captor Capital. So according to the lawsuit, the CEO of Mellow Extracts agreed to sell the Mellow Extracts to I5 Cannabis for a price tag of 1.5 million Canadian, paid in 3.7 million shares of stock. So the lawsuit claims that the payment was delayed and the I5 shares were replaced at the time of payment by Captor Capital shares issued with a 12-month restriction for sale. So the shares he finally received allegedly carried a market value of $525,000, well below the 1.5 million he was promised. So is that where the breach of contract comes in?
Maybe, but that's valuation, I think, and that's, buyer beware. When you do a stock trade, look at high times, look what happened there.
And who in the hell would sign an agreement paying him $7,500 a month for a 5-year term? Like, that's crazy. Might as well just give him a $12.5 million mansion with his MedMen buddies.
Yeah, we see this kind of deal a lot. They're holdover executives, number one, to ease transition, number two, to sort of sweeten the pie, because when it's an all stock deal, there's no cash. So this type of hybrid is common, especially when the majority of the compensation is through stock. Individual business owners, they want some money. And so this holdover of a CEO or other type of executive is fairly common. This is not an unusual cannabis deal so far. The terms themselves are common in the industry.
So what's also interesting is the contract included a clause under the agreement that could only be terminated by Captor without cause upon a 90-day notice with 18-month severance pay. So the CEO of this extract company is claiming that Captor never paid him any compensation and the agreement was never formally terminated. It seems like there was a way for Captor to get out of this deal, even though they kind of came in at the last minute. It's an interesting situation.
I have not reviewed the contracts, the underlying contracts between the parties. There does appear to be, we would call it in the law, prima facie. That means on the face of it, a claim. They had a piece of paper and it said you were going to give me $1.5 million in stock. They didn't give him $1.5 million in stock, allegedly, given the valuation. And the contract said they're going to pay him a monthly amount, and apparently they did not do that either. So that would be a prima facie case of breach of contract.
Mm-hmm.
Whether they have reasons or not, or there's underlying, that's a defense. But so far, he has a colorable claim.
In a different story, the CEO of Harborside down in California, huge dispensary, made a post on Facebook saying that he's never been involved with so many deceits since being in the regulated marketplace, that the legacy market or black market was so much easier to be able to give a handshake and $1 million, and he's never ran into so much deceit. And so back to this article, this lawsuit has accusations about deceit and breach of oral contracts from Captor Capital and its subsidiaries. So about his role as CEO. So there you go. Um, it's a little bit weird. You got to have things in writing, and then when somebody comes in last minute, there's a different company involved.
Again, I have not read any of the documents. Obviously, I'm not involved as counsel in this lawsuit, but I think that this should be a cautionary tale to business owners of any type of business, that you need to understand fully what you are agreeing to. And sometimes it can be very attractive. Hey, I'm going to buy out your company for $100 million in stock in my company. Well, in that case, you're rolling the dice that the other company is actually worth more than $100 million to make your stock worth $100 million, right? And second, these tail end provisions of staying on in exchange for compensation or exchange for additional funds, you got to make sure that the company can pay that, that there's funds there. I've been involved in transactions where similar promises were made and the acquiring company just was not financially able to follow through on those agreements. And it's unfortunate. But if you are looking for an exit and your exit is by acquisition, make sure you have an attorney, make sure it's in writing, and make sure you understand how you can get out of it, how they can get out of it, and the ramifications of all of those decisions. Because unfortunately, Josh, this is pretty common. I have run across 3 in 5 years in Washington. 3 deals like this that have failed spectacularly.
Well, I think it was March of 2019 that you were on a panel at the World Trade Center that I was moderating. We talked about this very specific situation where lawsuits were going to happen in the eventuality that prices drop. And so here we are. This lawsuit is based on oral agreements. This is a promise. Like, you can't really sue somebody over something somebody said. That's insane. Actually, you could sue somebody for any reason, but like, who's going to win that? This is really about money and the price drop and him wanting to be compensated for that original price. But like we said, these lawsuits were going to happen the moment prices drop, and here we are.
First of all, we're making an assumption that there are no papers. I'm sure there are some papers.
But it does say oral agreements at the bottom. So a breach of oral contracts.
Well, the full sentence, though, Josh, says the lawsuit also includes accusations of deceit and additional oral contracts. So it's just poorly written on the part of the author. But in order to sell your whole company, especially a highly regulated cannabis company, there's going to be a piece of paper somewhere. But that aside, this is going to keep happening because it's business. This is business. If you are a nail salon and you have somebody come in and rent a table from you, there's disputes. So this is not disputes in and of themselves are not unique to cannabis. But what I would like to point out is that when you are dealing with an acquisition situation, you really, really, really need to pay attention because it can be very attractive. The numbers can be quite considerable, but if it's just numbers on paper, it doesn't really mean a lot. And if you are being acquired by Joe Blow, do your due diligence so that you can understand. I mean, this individual was being acquired by a company traded on the stock exchange. So you would think that they would be on the up and up and have something of a valuation. But again, remember, Josh, during this same time period, the CSX and the CSE just tanked for a variety of reasons. And, you have to pay attention to this.
And unfortunately, I don't think people are, because 15 months ago, when we did that international cannabis lab with a lawyer, accountant, and banker, and the director of the World Trade Center, they still, to this day, it hasn't changed. There isn't the accountability that we were talking about back then when I had asked the question, are there going to be future lawsuits due to, you know, certain valuations, the $420 million valuations from Pax Labs or whatever, or when prices drop, will there be lawsuits? And the answer back then was yes, obviously. And so I think that we're starting to see it. It's anyone listening to the podcast or just has business sense, this isn't anything new. It's just kind of interesting that somebody is going to try and hold somebody accountable for a verbal contract. This is cannabis. There is a lot of carpetbaggers out there just trying to make some money, and then there's a lot of altruistic people that don't have business sense. They're not savvy. And so there's going to be people that are taken advantage of, unfortunately.
And we'll see what happens with this litigation. But litigation is coming. It's coming to the industry. There's way too much money in the industry, and too much money has been just thrown around with ridiculous valuations. I mean, look at Aurora just marking down daily billions. And so just pay attention. And don't forget, if you are an accredited investor, that accredited investor designation means you can afford to lose this money, and you don't need this money to pay your rent. And that is what the whole SEC regulation of who can invest in these companies is for. So that's another thing to think about as well. You should consider your investments gone.
Yeah, that whole IPO from High Times that they had to delay it another 3 months while they get audited, that's not going to turn out too well. So we did a podcast about the high times and low places, and we'll probably follow up with another MedMen because this issue, MedMen, just keeps popping up, and I think they're the next one to drop. But you're going to have to come back to the Talking Hedge and find out. So I want to thank my guest, Katrina Glogowski, angel investor and attorney in Seattle. Thanks for being back on the podcast.
Thanks, Josh.
I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.